What's up, everybody? It's your mortgage expert, Brian McCauley here. So you're looking to buy a house in Dallas, Texas, and you want to know how you can qualify for a 0.5% lower interest rate at no cost, no strings attached? Stick around. In this video, I'm going to show you how. So the DFW housing market is officially back on track. We are seeing more buyers come off the sideline quicker as interest rates continue to drop. But affordability is still somewhat of a problem, and people are looking for interest rates to get a little bit lower. I would like that to happen as well. But in the meantime, while we're waiting on that, I want to talk about something today, which is a 0.5% interest rate buydown that you can qualify for free, so you don't have to wait. So what's a 0.5% temporary buy down? Well, you've probably heard the ton of terminology out there: interest rate buy downs, but more importantly, temporary interest rate buy downs. And these normally come in a couple different forms and like product types. You'll hear like a 1-0, you'll hear a 2-1, or you'll hear a 3-2-1 temporary interest rate buy down. All that means is the 1-0 means it is temporarily 1% lower than the going rate for you as the consumer for the first 12 payments. So in theory, if you qualify for $699 and you were able to get a 1-0, that means that you would have $599 for the first 12 payments. If you did a 2-1, that means it would be 2% lower for year one, 1% lower for year two. So it would obviously be $499 for year one, $599 for year two. 3-2-1, same concept you understand, but this cool little trick I'm fixing to teach you is something that a lot of our clients are qualifying for, and we are obviously splitting the cost with them as well. It's extremely cheap, but it's really advantageous. So what it does, it doesn't get your interest rate down 1% for an entire year. It gets your interest rate down 0.5%, but there's really almost no cost to you, the consumer, and we as the mortgage company are absorbing most of the cost just to give people incentives. Here's how it works. With certain loans, certain FICO scores, and certain down payments, we are basically absorbing 75 to 80% of the cost, and we're doing this for probably almost every single client that qualifies, unless they get the seller to pay for it. And of course, we'll let the sellers pay for it. But in the event they don't, here's how it works. Let's say that you qualify for 6.25. We will cover the cost and move that rate from 6.25 down to 5.75 for the first 12 payments. No cost to you, you just have to qualify. Now, that's really, really advantageous for you as the client. One, a 0.5% interest rate on top of whatever you qualified lower for the first 12 months saves you a lot of money. Number two, we're finding that with this little extra bump, it's putting people in better positions. It gets them more encouraged about obviously buying properties. But I think what it also does, it's setting people up for success for affordability now, knowing that majority of the folks that are buying houses from last year right now to the end of this year are probably not going to keep that mortgage for a long period of time. They may keep that house for a long period of time, but we don't believe they're going to keep that mortgage for a long period of time. Because and we'll see how well this ages, I've been saying for, 9 months that I think the bottom of interest rates are going to be probably summertime of 27. My guess is they'll be at least 1% lower. So I think they'll end up somewhere probably low 5s, high 4s for the A+ clients out there, but that's still really, really, really good. And I say that to say this: if you get a 6.25 rate right now, and I give you a 0.5% free for the first 12 months. Let's say you close in April, you skip May, your first payment's due June. So from June 25 to June 26, you got a 5.75 versus a 6.25. Now, obviously, once those 12 payments are done, payment 13, and I would jump back to 6.25. But since we think you're probably going to refinance somewhere, summertime of 27 or towards the end, the likelihood of you keeping that 6.25 is very, very low. So this is something that we rolled out about a month ago. Again, it's a qualification thing. It's not a cost thing. So as long as it's a certain product, you have a certain FICO score, we're willing to do it for all clients. We want them to be happy. We're also starting to see the market pick back up and a little bit more competition. And so when that happens, sometimes the buyers can't get as much closing costs to help them out with cash or maybe buy the rates down. So if you start to see this take shape and pick up pace, as rates come down, which obviously this always happens, rates drop, people get out there, and then of course the sellers start to get a little bit more leverage. It's not all the way there yet, but it's starting to. We are just doing this on behalf of the clients as a courtesy to you guys to help improve the terms, keep you happy, lower the payment and the rate short term, so that way everything is good until we get to a space probably a year from now, summer, maybe back half of summer 27, when everybody will be refinancing, taking advantage of those low interest rates and probably staying in those homes and those loans long term at that point. But in the meantime, if you guys have any questions, you're interested, have any clients, friends, or family that could benefit from this temporary 0.5% rate reduction for a year, do us a favor. Call us, email us, text us. No question's a bad question. We're always here for you. Until next time, stay tuned.